Hello, welcome. Today being 15th of October, Sunday. This will be my first journaling. How I'm going to be doing the market and all. Here I'm on DXY pair. DXY on a monthly time frame. I'll be showing you the top down analysis and what went on as of last week to this very point. I'm expecting to see as of this week. So here now is another block. This region is another block that was there, and there's a fair value gap. This orange box is the fair value gap on the monthly time frame. After I broke down from this other block here, from that red candle, it wanted to dig into the fair value gap on the monthly time frame. I'll show you something else. This blue block here is the fair value gap on the weekly time frame. Let me highlight it with we only. Yeah. That is the fair value gap on the weekly time frame, and like I see now, market has entered the one from the monthly, and I'm still expecting it to enter into the weekly time frame. So yeah, that's it. So that means we're going to be seeking on the DXY. We're looking for bullish movement on the DXY. So starting from Monday being, so this is a weekly, this is a daily candle. So I want to highlight from what happened as of last week that just passed, the previous week that just passed here. And this is it here. As you can see, market keep making higher highs. Yeah. So here's my arrow. And you can see from here, high, low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, and here. You can see, so we are expecting markets to keep on the bullish trend, to keep finding higher highs and higher lows. So yeah, that's just basically it. So as you can see here now, this was the break of market structure here from here, but that was not the main idea, because this happened because of the fact that it touched a weekly fair value gap. This blue dot, it touched a weekly fair value gap. So in the experience that it will want to do a fake out, hoping that people will go short from that fair value gap there. As you can see, it did cool down. Yes, it did cool down, but it was not meant to go down, because it was going down to see this other block here, which it did touch. So continue. Yes, you can see it touched the first time. After it went up, came down, touched the first time, went up to touch the fair value gap, the weekly fair value gap, came down to enter the other block for the second time again. And now we're expecting it to dig properly into the fair value gap on the weekly time frame, the weekly fair value gap, sorry. So yeah, see it more accurately here. That's what happened. That's why I was looking for higher prices on the DXY. If you're looking for higher prices on the DXY, it means that you find lower prices on Euro, USD. So that was just it here. So we're moving to Euro USD, because that's the pair I'm going to be trading for life. Basically for life. This is, let me just show you the fair value gap gaps to here. So as you can see, these are the fair value gaps. Also on Euro USD, this orange one have been the monthly and the blue one being the weekly. But as you can see the difference that this one now has not hit the fair value gaps yet, but the XY have hit their own, meaning that this one will still be looking for bearish trend here. We'll still be looking for bearish trend. I'm sorry, don't mind all these jargons that's on my screen. So yeah, we're heading into a daily time frame now. This is my daily time frame. In the idea that I'm going to be looking for a bearish move here now. As you can see here, this purple line that I drew here was a fair value gap that was only weak once, just like how we have it on the DXY. The fair value gap, it came into it, weak it and went down. But I still had to, as of last week, I still had to make reference this region for some certain reasons, because it was only a week that went there, and we're looking to go short. We're looking to go short, and there was no other reliable place to look for a seat to go short. So I decided to pay attention to that fair value gap there. So we're going to be heading down to the 1 hour time frame. As of this week was actually a news week. This CPI, FOMC, them week. And if you can see on the 1 hour time frame, as of last week on Friday, there was a close, there was a void, liquidity void. Let me change this to something like red. Let me change it to red. This is a liquidity void that was left. So this is what made me to learn that we have to look for higher prices first before eventually looking into lower prices for the Euro USD. So I made reference to this liquidity void, and from this massive bullish move here there's a fair value gap here. Fair value gap inside the other block, as you can see. Here is the fair value gap inside of the other block, and the fair value gap inside of another block. And this is, I made reference that this is the mid range of the other block in the 4 hours time frame. I just skipped that 4 hours to save up time. This is a fair value gap. This is the mid range of the other block from a 4 hour time frame, which happens also coincident to be the end of the fair value gap. And you see, as you can see now, the bodies respected that line. See, it was respected, and higher prices was found. Here was a break of structure. There was a break of structure. There, a fair value gap was inside, which market got back into, went up to close this liquidity void. As you can see there, closed up the liquidity void. So we'll be heading down to a lower time frame to see what actually went on during that period. We're going down to a 15 minutes time frame now. So this is it here. You can see here, end of the verb. This is it, the mid-range point here. Market touched it once, twice, almost 3 times. Went up, took out the high that we have here. On the 1 hour, on 1 hour time frame, this is a high here. And as you can see also, it took out this high on the 15 minutes time frame. See it right there. That was on the 15 minute time frame, and this is around 9 o'clock that this high was taken out. 9 o'clock, and so around here, this was when the high was taken out. So what I just did was I looked for a fair value gap. Guys, this is a break of market structure. I looked for a fair value gap below the break of market structure, that is being here. This fair value gap worked on a 1 hour time frame and is also valid on a 15-minute time frame. That same spot, you get. So we just placed our order in the fair value gap, the ending of the fair value gap based on how small it was. Set our stop loss. I were to right to close the liquidity void, and it came about 45 pips. As you can see, following your model, 45 pips was hit beautifully. Well, also you could have aimed for here, because this is relative equal highs here. Forgetting, don't look at the idea that it's looking kind of shoving. It's a relative equal high there, and as you can see, markets round trades to show that it wanted to take out the buy stops there. And if you were scared to take out anything from there, here was actually a good place. That was a 25 pips, 22 pips, and this is a 1:4. Yes, well, I was looking for market to close up this void in particular. That was where my main aim was, that void. And after I closed up the void, as you can see again, break of market structure, that is from here. Market comes down back to test into this place, that is to touch the end of this liquidity void. Now this liquidity void, it almost reaches it, but if you observe closely, this, or let me leave it first. When we go down to a lower time frame, you see what I want to talk about here. Step down a bit to lower time frame, you see, all this just happened on a Monday. All this happened just on a Monday, I think, yeah. For the service, as you can see, I see it here, Monday. That is by midnight. That is for us now. This is midnight New York time. For us, this is already around 2. That is being Tuesday. But we are going to use New York time, because that is what market will base to. That will market react to New York time. You feel me? So yeah. After the shift in market structure, again, it broke through here, and I had to take notes of this last up candle. I'll take note of it, and that's where you can take 6-second trade here. As you can see now, this fair value gap, guys, this candle now is the candle that broke, that did the break of market structure, and market came back to fill in the fair value gap there just partially, and went up to complete it there. Yeah, so here also you can, if you had missed this entry, I have taken another one around here, or quarter of this range. Let's just use quarter of the range, and you can set stop loss around here. You just have to mitigate your loss. So this will just be a 1:1.7. But normally this was where I was planning to put my loss based on what I was seeing in this place on a lower time frame. You feel me? But let's assume now you have to follow. We are going to be following the normal procedure, which is after the first fair value gap, the second fair value gap, use the mid range. That is the 8.5 pips stop loss, that is the 9 pips stop loss. And if you had to aim for the top, it will give you a 1:2.5. It's also a good listen, considering the fact that it just went, touched it, and you were not on loss for too long, and hit your take profit nicely. You get? And if eventually you had put your market on this mid range, yes, you wouldn't have activated them, but as you can see, market comes to closing the fair value gap fully. See, there comes into closing the fair value gap fully. That means the second fair value gap now, the mid range, is still a valid place to place a stop loss. And as you can see, it goes and takes off buy stops. All this trade now is really happening because of this purple place here now that was seeking, that is this purple line here, was seeking market to fill into the daily order block. As you can see there, this is a fair value gap I need no main mention of. So basically that's what we're after, that order block, that block here, the daily fair value gap, sorry. That's what we're after. And market did eventually, as you can see, it is smoothly from this fair value gap here that we've set up on our 5 minutes time frame, and it went for a 55 pips, there about 51 pips. As you can see, 1:7. It goes in smoothly. This also is a break of market structure, yes, because I was looking for a sell. Naturally, the big picture is a sell, but we're riding the buy because it's a retracement on the weekly and the daily time frame. It's a retracement on the weekly and monthly daily time frame, yeah. So it's going to be having big moves. So on the front, for the daily and weekly time frame, it's going to look small, but if you're using a smaller time frame like the 15 minutes, 5 minutes, it's actually a big move. So because you're looking for a sell does not mean you can't also catch all those big moves, because at that point now we are working with what, as you are looking at the big picture, you should also be looking at what your daily bias is going to be. Your weekly bias now is a sell. Yes, maybe the month now is going on a downtrend. That does not mean because you are going bearish, does not mean that the whole candle for that month, or for the whole candle for that month, that has been the 30 days in a month or the 31 days in a month, should be a bearish candle. I don't know if you understand, because definitely there will be retracement. So some days will be a buy, some days will be a sell. So this was just happened. Monday happened to be one of those days I was going to be a buy. So let me put a rectangle for being, so you see when Tuesday started, being there. And as you can see here, this is the Asian section, this is the London session. The London session was one that hit here beautifully well. This is where market do open. Like, this is the New York section here, 7 o'clock opening. That's the New York session. And after the shift in market structure, it broke down from market, as you can see closely there. Fair value gap, mid-range your fair value gap. The candle that holds the fair value gap was held as stop loss and traded to this. Normally this was where I was going to be trading to, because this other block, this red candle, was actually a suspicious candle. So what we do is we look for the closest fruit. As ICT will say, the closest fruit is what we should hunt down. We should not look for the highest high and the low, the highest and the lowest low, the highest swinger and the lowest swinger. So that's what I was after, and it gave a good 1:3, 17 pips. Was cleared off that morning, and after hitting, as you can see, because of this other block, just took out the sell side there and went up, changed your market structure, consolidated for a bit, went up, came down back to fill in the void, this fair value gap here. There's a fair value gap, hitting the fair value gap, as of 10:45. So that was just it, and it went back up to touch, closing properly on the daily fair value gap here, and went up to a block I was observing there, and after that was this. Basically I was after a break of market structure being here, you feel me, I was expecting this was it here. Yes, it did give a other block like a fair value gap here inside here, but I was expecting market to try and like reach properly into here because this was very close. As the market to at least try and closing the whole fair value gap, which it did. It instead just consolidated for a bit around here. And because of this is news, anything can happen. Left the fair value gap on it on the hourly time frame, entered it back again. We left to touch this here, entered back for the last time, and that's when the news, the what is the name, the 8:30 news came out. The news that we had, I think this what's the name of this news? Sorry, I can't properly remember the name properly. Let me show you the news that came out. That was being Thursday, right? Yeah, being Thursday. CPI, yeah, that was the CPI news that came out for my service. So yeah, that was what actually caused that news. Actually caused market to skyrocket down to hit. Let me show you. I think it's on the 4 time frame. There was a low. There were two lows I was observing there. Okay, now going into this week, let me delete some of all these charts here so they wouldn't be needy anymore. Okay, so going into this week, I have to be paying attention to this low here. That's a sell side. And these are the lows I have my attention on before we eventually enter the fair value gap. Yeah. And also we'll be watching our market opens this out on Monday regarding this fair value gap here. Let me turn this sky boost. This is a daily fair value gap. I'll be watching our markets plays out here. I'm looking for lower prices. I'm looking for markets to look at. Into the sell side. And as you can see, the fair value gap also has another fair value gap at the mid range. As in here sits the mid range of the fair value gap is also the mid range of another fair value gap on an hourly time frame. So it's more or less like a win-win. Let's just take note of it. You see, they are almost sharing the same mid range. So you should be looking for markets to reach into here. Let's see if markets will be able to reach into here, or is it just stop around here before taking out the sell side. But I assume the market should be able to reach into that particular place, region. Everything sure depends on how Monday's trade go. And as you can see also, is also the 50%, the mid range of the move. As you can see there, the fair value gap there. So just look, are you seeing this? 50% mid range of the fair value gap, of the daily fair value gap, is also the 50% of the move that just occurred. So yeah, that place is something I would like to observe and know what is going to happen there. That's just basically it. So let me read that place back for you. I was looking on. So yeah, that was just it. That was just it. If I keep looking, other fair value gaps are going to be popping up in that same region. So that is my area of concentration here. That was this region for this week. And once Monday trades open and start, we'll know how everything is going to work out. Yeah. So that's it.